Okay, folks, welcome to Post-Communism Thursday Night Stock Charge Live. The election is over. Patriots have won, and it's a dawn of a new day. If I could get my camera to work, that would be wonderful, properly. It's a little bit much. A little bit much. How's that? I don't know. A little bit much. I don't know. Okay. Let's say hello to folks. We have like two people on. Slow day. Slow day. All right. So, what we're going to talk about tonight is post-election America, post-election world, to be honest with you. Our elections have just shaken the world. It cannot be understated how important it is. When I was over in Europe, the last time I was in Europe, you really can't appreciate the dominance, the influence that the United States has over the world until you go overseas and you hear how they speak of America. They obviously they have their biases and they have they're pro-American too. So, but there's one underlying tone or one underlying narrative, and it's that the United States is one. It's the world's leader. I'll leave it at that. It's the world leader. And when we sneeze, they catch a cold. Even with China growing, still, we sneeze, they catch a cold. So the dollar had a rip your face off rally. That reversed today. So the knee-jerk reaction is frequently the wrong reaction. And Fed Chair Powell's statement today, or his press conference, I didn't listen to the whole thing. I was busy. But the presser was already a little bit hawkish, not dovish, but hawkish. We're going to go to the CME Fed Watch tool in a moment, and we'll talk about the forward-looking expectations out of the Federal Reserve going into the new year. And it's not as bright as it was yesterday. It's not as bright as it was 6 hours ago. So buckle up. You know, we scored a major victory, meaning the patriots of this country, but it didn't end the war. There are going to be skirmishes and battles. There's going to be a long, drawn-out, protracted battle here. So enjoy this limelight, enjoy the success, but the battles are just beginning. Let me share my screen. Let's get to it. Before I share my screen, let's say hello to no volume. No, there's got to be volume. Oh, you scared me. You got me. All right, thank you, Bonnie Bean. Thank you for correcting that. I all too often I start talking and I don't do an audio check, and it wouldn't have shocked me if it was not on. So sometimes I hit the mute button or it comes unplugged. So we have Bonnie Bean on, who gave me a little bit of a heart attack, but welcome nonetheless. We have Mr. Tim. Welcome. No worries, Bonnie. We love you. Seymour Rivers. Hey, Bob, are you glad Sober October's over? Audio is very good. Thank you, Seymour. To answer your question, yeah. So I didn't make my goal of this camera. I got to fix it somehow. I didn't make my goal of dropping 10 pounds until November the 2nd. Then I was down 10 pounds. In terms of not drinking alcohol, you know, it's really good to give your body a break. There's no doubt about it. Now, don't get me wrong. I like my scotch on a Friday night with a nice cigar. Saturday, no doubt. But to give it a break is a good thing. Am I glad it's over? Yes. Am I continuing on with hitting the gym and watching the diet? Absolutely. Because I didn't meet the short-term goal was by the end of October, drop 10 pounds of body fat. Ideally, put on some muscle. But in terms of did I reach my overall objective? I want to be 185. I'm at 189 right now. I may need to go down a couple more pounds to get the body fat off, but I don't suspect I'll go much lower than that. So I'm very close. And to answer your question, yeah, I'm glad it's over. It's an achievement, my 5th year. So it's nice to have done it. And I'll probably be doing dry January this year. I started that last year. I didn't. I failed last month. Last year, I didn't. Or this past January, I should say, not last year. I tried and I just stopped. I wasn't disciplined. But this year, I'm going to stick with it and dry January and going to get beefy for the spring. Yeah, yeah, no doubt about it. I was very happy, and it was weird. It was like I I weighed in on the 30 for Halloween, and I was just shy of goal. And the first, not much of a change, but then all of a sudden, a major drop on the second. Franklin, hey brother, welcome. Thank you, sir. Thank you, Talon. Welcome. Ah, you're making me blush. Thank you, Bonnie. Thank you very much. Appreciate that. Um, for those not familiar, Talon is a fireman, and our hats off to our dedicated fireman. A great gentleman, along with Franklin. A great, great gentleman, and great to have you here. Thank you so much for being here. It's my privilege. And let's get to it. I don't have a lot of topics to go over tonight. Let me share my screen before I forget, because when would I ever do that? Probably as frequently as not having my audio on, which is pretty frequently. Okay, so I think the thing that we need to pay attention to right now in the markets, and what we're going to talk about in a minute, is SOUN. I titled the video that for those folks that are coming in off of Stock Twits. Yes, I will be talking about SOUN. I did a video on SOUN about a month ago. It got a lot of views too. And I said, you know what? Let me do a follow-up, because initially we booked profits. I kept some on, and then it pulled back. I bought more, and then today, really, it really just lifted off. So we'll revisit that stock. We'll talk about the macro story with you, not YouTube, with SOUN in the longer term. I'm looking for that video right now. It won't let me link to it at the end of this live stream. Here it is. 1,728 views and a bunch of likes. And I'll post the link. Even I get the commercials. So back here on, I don't know if they provide me a date. Back here on, I don't know, three weeks ago. Look back 3 weeks on my videos. It's there, and I'll link to it right now if you want to watch it later on. I talked about the stock. I thought it was moving up higher. I liked it technically. I liked it fundamentally. They do report earnings at the beginning of December. So check that out when you get a chance. Okay, so what else we're going to talk about besides SOUN is the valuation of the market. And the valuation doesn't matter. I always say this. I know I'm repeating myself. The valuation doesn't matter until it matters. Right? And when did I start talking about valuations of the market? When the market starts going down, and the talking heads on CNBC speak to you as if you're a 3-year-old, saying, you should have expected this. Of course, the stocks are going down. We always knew this. They talk in that tone. They won't come out and say, oh, we told you last week or last month or last year stocks are overvalued. They're going to go down because of valuations. No, they're going to talk to it like in a tone, a matter of fact tone. Of course they're going down. The valuations are too heavy. The probabilities of a Federal Reserve rate cut going to January are not in the books anymore. So where is the Shiller PE ratio at current? We're at 38. We took, well, very close, I should say. We didn't take out. we're very close to taking out the highs of 2021 at 38.58. We can't ignore this. And you may be saying, all right, how else might we value the market? Two different views. Same metric, but a different way of looking at it. First one, Buffett indicator. We've been strongly overvalued for about 2 months now, 3 months. We are way above the 2 standard deviation move on the Buffett indicator. So equities are very, very expensive. And why is old man Buffett dumping shares? He knows it's time to sell. And we could melt up here. I'm not saying tomorrow, go sell your stocks. Did I sell stocks today based upon this information? No, absolutely not. The path of least resistance is up. No doubt about it. Are we overbought short term? Yes. Did the Qs break out? Yeah, they did. They did break out. So they're probably going to pull back, fill the gap, and probably going to proceed up higher. Another way of looking at this chart is this way. Buffett indicator. We are at, is he saying all-time highs? He's saying an all-time highs. We may just be. If not, we're right there at all-time highs on the Buffett indicator. And, it doesn't end well, folks. And I want to pause here. A major event happened. It's very, very easy to go back to life as usual. There is no way on God's green earth that they want a President Trump that is successful. They want to throw up so many obstacles in this guy's way that he'll be unable to govern. He will be unable to execute on his promises. That way it weakens J.D. Vance when he goes up for the presidential run. And ideally, these demons want to get back into the White House. They want that power back. So to think that they're not going to fight back is foolhardy. Think about what they've done since, not just since 2020 when they got power. Think about what they did before Trump ever became president the first time. They bugged his offices. Obama bugged his offices. They destroyed his presidency or kneecapped his presidency. And the lawfare that was unleashed on him was incredible. The tenacity of these people is unbridled. They are not going away. No way are they going away. So the way I look at this market, and I look at things from a very, very pragmatic view, knowing that people have lost power and are afraid of going to prison. The powers that be over in corporate America and in Europe, I heard Macron, president of France, speaking today, talking about how the European Union's got to stand firm. I don't want to comment on President Trump. So it's already loggerheads. They don't approve. Old Europe does not approve of our new president. So does that mean they go quietly sulking off into the night with their tails between their legs? No. Too much money involved. Way too much money involved. So, and they're very, very invested at this point. So the stage is set for a market that goes into free fall. What is going to prevent that short term? Seasonality. November, the best month by far for equities. December, very favorable, not necessarily the second best, but your Santa Claus rally, you usually get that, especially at the back half of the year, the final 2 weeks of the year. They put the computers on autopilot. Wall Street goes on vacation. Simple as that. They come back in the new year. Then you get your January effect. And that's kind of like the pulse check for the rest of the year. So while I'm looking at this right now and saying, okay, we have a problem here, I'll tighten up stops, but I'm not selling my positions. Moving on. I haven't paid attention all too much to economic data this week because there hasn't been all that much. We had Factory orders on Monday, they came in as expected. ISM services came in better than expected. Expansionary. Any read above 50 is a sign of economic expansion in the services sector. Same thing for the PMI. A little bit of a miss there. Thursday's initial jobless claims, they beat by 1,000. Productivity missed. We know what the FOMC did. We're going to talk more about that in the next slide. Tomorrow, we get consumer sentiment and a couple of Fed heads out to dress up whatever comments that Powell made today that they may want to put a shine on or dull down. That's what they do. It's all about the narrative. Okay, so what you're looking at here is the current view of a probability of an ease going out and into December. Then you go out and take a look at January. All right, so December probability of an ease, 73.5. Probability of an ease going out to January, 83. Looks like strong numbers, right? But what I do before the Federal Reserve makes their announcement, what I like to do is I like to do a print screen of what it looked like before they make the announcement, before they have the presser. And then I'm able to do a pulse check of, okay, what are market participants thinking about forward-looking guidance? I don't want to listen to the talking heads on CNBC. I don't want them taking space up in my head, parking space up in my head. I want to be able to look at the data myself and conclude which way they're going to go. So November is gone now. December is the slide I just showed you. The probability of an ease was 100%. Now, we are in the 70s at 73.5, a pretty serious drop. Then when you take a look at the read, where is it? I should be wearing my glasses. I don't know why I'm not wearing my glasses, but we're going with it anyway. When we take a look at the read for January, which is at 83%, the probability of an ease going out to January was 100% prior to today's Federal Reserve announcement. So let's take that data, okay, and say, okay, why has the stock market been rallying? Because we're going to get rate cuts. But then Larry Fink came out the other day, he's the CEO of BlackRock, and said expect one more rate cut for the year. That's it. And today, by his timeline, should have been the final rate cut. But what if it doesn't happen? Let's go back and take a look at where we're at in the market. Schiller PE ratio is at 38. If they stop raising rates, what's the motivation to buy more stocks? I think we're entering a Wile E. Coyote moment. And the December rate cut announcement is going to be a serious one. Because today, the market's kind of shrugged off the ambiguity of Jay Powell. I don't think they're going to do that in December. I think they're going to want, as these numbers begin to slip, the probabilities of a cut in December and January begin to slip. And frankly, if you go out to, I didn't do a print screen in March. This was at 100% as well. I don't think I went out to May. I think the furthest I went out to was to March, and that was at 100% prior to the Federal Reserve's announcement. So these are what I'm looking for are catalysts. What could adversely impact the market right now? Well, the first thing I want to do is I want to understand what's driving the market right now, and is it being threatened? And the answer is yeah, sure. Market-based inflation expectations continue to rise now at their highest levels since April the 5th. This is all from Charles Bellello, I always screw up his name, and he did a video on this. I'm going to watch it later. We're at serious resistance levels here on the 5-year break-even point on inflation. So I think the worst thing that could possibly happen for the equity markets right now, and this is going to sound sick and perverse, I think the worst thing that could happen for the equity markets is that we get strong jobs data. If we get strong jobs data and you add that to the fact that inflationary pressures are rising, which is why you're seeing the 10-year yield rally so strong, then that puts the market in a precarious position. So, and if jobs weaken and the Federal Reserve is forced to stay on that current course or just to pause on rate cuts, then we're going to want to step back into gold because that's stagflationary. So we're going to go over the weekly charts in a moment. We'll see how the markets reacted to Jay Powell's statements today. I think where they're guiding towards is a cut every other meeting. I think that's where we're going. If they're not going to go in December, it'll be reflected in the Fed Watch tool, and we'll be going over that nightly with members. This never happens. It started happening on Thursday. Oh, I can't even lift my right shoulder up anymore. Okay. All right, let's move on. Job openings declining rapidly. This is stagflationary. So what we want to watch out for, the job openings declining is the precursor to the unemployment rate moving up, which it has been doing. So this is a major problem for the Federal Reserve because job openings are declining, unemployment rate is rising, and inflation expectations are moving up. So if it was just an inflation concern, they would hike rates. If it was just a jobs concern where unemployment is rising, well, they would cut rates. What are they going to do when both inflation is going up and jobs are going down and unemployment rates moving up? I mean, that's their worst nightmare. We live in interesting times. We really, really do. And when you take a look at the U.S. government's net interest payments on federal debt, we just hit a new record high of $1.12 trillion in Q3 alone, not in 2024, Q3. The interest has doubled in 3 years. Is this right? I actually have to question this. Wow. Yeah, frequency quarterly. How can that be? I'm suspect on that number. I mean, we just crossed over $1 trillion on an annual basis. I can't see this tripling. Oh, God damn it. I can't see this tripling. Oh, actually quadrupling. That would be a quadruple. So if this is true, I mean, it is the Fed. It's their own data. This is shocking. This is truly shocking. So if this is accurate, we would be paying out more in interest than we're taking in tax collection or on par with. That's scary stuff. I'm trying to yeah, we're at $35.88 trillion right now. Jesus Christ. And yields are going up. All right. Let's take a moment and go over the weekly charts and see how we're poised to close out the week. Let me go to comments first before I get into it. TZ Burton, welcome. Colonel, okay. Sean, Mr. Sean, good evening to you. Talon, can't forget Sean may retire. Sean, you retired? I thought Sean is a fireman as well. Or was a fireman. You look too young to retire. Holy cow. Washington state voters reject the measure to stop capital gains taxes. Too bad. The state would have boomed. They have no. It's really crazy. Well, why is it they don't look at history and they look at the Reagan tax cuts and what that did for this country? Sorry about my ugly puss being in the way, but this is driving me mad. I have another one of these. I may have to break it out at some point in time, unless I figure this out. Okay, let's talk about a couple of things. One is the bullish percent index. You could kind of anticipate that this rally was going to happen, not so much by the weekly chart, but more so by the daily chart. That we became pretty oversold on pessimism, and the markets popped. Now, that's a good thing. It's just a reversion to the mean. That's all. Now, when you take a look at the yield curve is down on the week, but let's pay it some respect because it did have a breakout last week, and the path of least resistance at current remains to the upside for the yield curve. Now, we know I haven't done this in a while, but I'm going to do it tonight because we just hit record highs, historical highs on the Buffett indicator in terms of market valuations. And when you go back in time, you have the yield curve, which goes uninverted. In gray, you have the S&P 500. So once you get a lot of momentum and the uninversion of the yield curve, the S&P 500, NASDAQ, whatever, rolls over and rolls over hard, depending upon its own measure of volatility or beta. That was 2000. This is a financial crisis. COVID, we are here. We uninverted 2 months now. We uninverted. This is now we're in our third month of uninversion of the yield curve. Don't ignore this. Just because something hasn't happened yet doesn't mean it's not going to. The yield curve stayed uninverted. Let's go to 2000 for a moment. War game this. It uninverted in March of 2007. This is a financial crisis. 1 month, 2 month, 3 month. It closed inverted again, but then that was your high or low, and it was off to the races. So 3 months, let's say. Then here we uninverted. We uninverted. We just were skyrocketing up higher. So once this gets going in the wrong direction, it's very, very negative for the equity markets, folks. So let's be, again, for those folks just joining in, I'm not saying sell stocks. I'm not selling stocks. But have a stop loss, have an exit strategy, and maybe start nibbling on some shorts. We added more to our shorts yesterday. CRB commodity index. This was falling apart. We now have a new weekly higher high. We're up nearly 0.75% on the week. this saucer or cup with handle formation, whatever you want to call it, is still intact, still in play. TLT, of which we bought more of yesterday, down in 80, I think it was 89. We bought it around there. It was definitely had an 80 handle. So that was a good buy. We bought that in the pre-market because they were killing bonds yesterday morning, and they're already beaten up. So I figured, you know what? Let's add more on this pullback. And sure enough, they rallied today, and we have a pretty big position in bonds right now. Why? The reason is that let's go back to the yield curve for a moment, because what did bonds do during these yield curve steepenings? Let's get curious. TCT, the contrarian trader. That's where my mind's at. TLT. All right. So they didn't have the TLT back here, but when the yield curve became uninverted, money went into bonds out of safety. Same thing back here during COVID. So I suspect that's where money is going to go rotating in, unless, of course, we have a sovereign debt crisis, and that would be a major problem. I don't think that's going to happen. Not now. No. If once they start putting out the details of cutting government, that will offset that sovereign debt crisis. We are going to hit the debt ceiling December 31st. The word is that the event will reduce treasury and add liquidity, and therefore alleviating pressure. I'm wargaming this in my head right now. The Democrats are not going to want to say, not that people will remember 4 years from now, but for looking at it from the Democratic perspective, they're not going to want to hold up the debt story, the debt, and threaten the economy and threaten equities before they leave office. But at this point, might they blame it on Trump because he's coming in? I don't think it necessarily matters for the overall economy. I think it's actually pretty good. But it could be very, very negative for the equity market because you have indecision there. So will they pass it? Probably. What does it mean if they don't? I think it's going to be a hiccup for the equity markets, but a hiccup. Net, I don't think they really care. Yields. I'm going back to your question right now. I'm still thinking about it. I may have more to say on that in a minute. I'm still thinking about it. Yields attempted a breakout this week, but were rejected. I want to take a look at a daily view here. Stokes rolling over. We haven't broken trend yet, but I think that we could be at a peak. Tips. The tip market is saying that we've hit at least a short-term peak, and they're expecting lower lows on yields. Why? Because the tips have flashed at current with one trading day left to go. A lot can happen. The tips are flashing a bullish key reversal. Very, very bullish stuff. So let's go daily view on tips. These are Treasury inflation protected securities. Stokes hooking up. Looks like they're going to rally here. There'll be some backing and filling, but it looks like they're going to rally. Now, I didn't take a look at the gold stocks today, but my guess is that we've rallied off the week, the lows of the week. But we're still down, though. The dollar reversed off of its highs. Very strong day yesterday for the dollar. Let's go daily view. Big gap down. How is volume? Pretty big. Distribution of the dollar. Euro. Still down on the week, but it rallied off the lows. My guess is euro rallied. Yen. Reversal week so far. Possible bottom and a possible higher low on the yen. I'll give you my thoughts on this when we go to gold and the mining stocks and silver. Bitcoin, weekly chart. I mean, what a rip your face off rally here. New all-time highs on Bitcoin. Up on the week, over 10.75% on the day. We're stretched here. So expect a pullback in the coming days. Now we're long of Coinbase and that stock. Let's go back to the weekly chart and talk about it. Excuse me. What a move here. Coinbase looking to bomb up nearly 40% on the week. Thank you, Seymour. Appreciate that. I appreciate you as well. Appreciate everyone. Thank you for being here. Volatility down 30.5% on the week. Daily view. Down another 6.5% on the week. I think we're coming down to a 14 handle. We're probably already there, just shy of it. We have a low 15 handle. We're probably coming down here to 1422. That implies that the S&P 500 is going to move up. Dow Transports, a major league breakout here. We've been looking at this chart. Look at all these lines and whatnot. We've been looking at this chart for, I don't know, 2 years now, watching this setup form. And the bet was, do we break out or do we break down? Well, it looks as though we have our answer. We have a major, major breakout here. Come on, man. Come on, man. They're not letting me take, here we go. Clean that up a little bit. The path of least resistance is clearly to the upside for the Dow Transports. Now we own, I have a pretty large position now in Boeing. Real contrarian trade. That is an investment. It's pretty big. It's one of my biggest holdings now. So Boeing, let's spend a moment here. So I will point your attention to, and yes, we're down on the week, and we may still move lower and whatnot. So we broke out, believe it or not, nearly 3 weeks ago on Boeing on a weekly time frame. And the reason why we were accumulating so much of it is that we got what we wanted out of Boeing. We saw that the shares stopped going down on bad news. That's good stuff, but it wasn't enough. They got new management. That's not what I wanted to do. They got new management. We wanted old management gone. And they settled the strike. So now this is what you call a kitchen sink moment for Boeing. They had earnings. They were horrific, horrible. You had a strike going on. You had so many things going wrong. They had to issue new shares. Their debt rating was under pressure. So many things going wrong, yet the stock stopped going down. Why? I spoke about this a couple of weeks ago. I don't know if it was on live stream or with members. The N in CAN SLIM acronym out of Investors Business Daily for when you want to buy a stock. Each letter CAN SLIM represents something, but the N, the last letter of CAN SLIM, the third letter in CAN SLIM is N. What does N stand for? New. What is new? New management, new policies, no more DEI, and they have a new contract. So the worries about their workforce for the next 4 or 5 years, not a problem. And we stopped going down. Now I think that we begin to move up. The only thing I'll say is that this is a bit of a threat. We may rally, pull back, and retest these lows again. So I wouldn't go a lot bigger on my position right now. We're good with what we have. I just want to take a peek at a daily chart. It was up today, got hammered yesterday. Okay, good. Inside bar, no new low. All right, Dow Jones Industrial Average, new all-time record highs. Up nearly 4% on the week. Volume will come in about average. On the day, the Dow was down today. Flat, I should say, flat. S&P 500, daily view, a weekly view. We had broken down 2 weeks ago. Follow through last week. This week, new all-time record highs. 1 trading day left to go. Daily view. That's a 3-minute view. Daily view. We'll try that again. We're pretty extended here on the S&Ps. Let's be careful here, folks. We're very extended. Relative to the third standard deviation Bollinger Band, volume was good today. Let's see how they close this out. Not wonderful. This is a 30-minute chart. We're overbought on RSI. Big volume into the close, to the downside. Trip Qs, weekly chart. New all-time record highs. Up over 5.33% on the week. Daily view. Very extended here. Relative to the third standard deviation Bollinger Band. Small caps. Let's use the IWM. Major breakout. And what's shocking here is that you have the 10-year yield, which is very, very strong. Yeah, it was down today, but it was up huge yesterday. It was up huge for the past couple of weeks, yet the small caps, they were like, we don't care. And they're very susceptible to interest rates. Daily chart, very extended. For a scalp, you may want to look at the TZA. TZA puts you short of the small caps. I wouldn't stay long. I wouldn't stay long of this very long. Blah, blah, blah. Yeah, I think this is going to pop for a scalp. The banks daily chart, they pulled in a bit, but they had a very strong week. This is not a daily, weekly chart. Let's go to a weekly chart to appreciate what they've been doing. That's a monthly chart. We don't want that. We'll figure this out eventually. Yeah, there we go. Yay, Bob. Okay, weekly chart up 4.5% on the week. Massive week. Incredible. Technology. This is a breakout. One trading day left to go. We're probably going to get a retest. If we successfully close above, let's call it 235 on the XLK, we'll do a retest next week. Path of least resistance remains higher thereafter. Semis weekly chart. Getting ready for a major move here. So my guess is that what I think was going to happen here, we know that looking at the chart of the Qs, chart of the small caps, chart of the S&P 500 on a daily time frame, we're extended relative to the third standard deviation Bollinger Band. Why does that matter? Why that matters is that we're not supposed to be there. We're not supposed to be up at the third standard deviation Bollinger Band. It's a pretty safe bet to make some profits real when you're up at those levels and reestablish at lower prices if you're a trader. So I think that we're going to pause these next couple of days and we'll see whether or not we get follow through. We may get a good setup and follow through. I'd be suspecting that the semis break out. The only concern I would have is with NVIDIA. And the reason for that is that unless there's news that's come out, and I don't know about it yet, the shares of SMCI, their third largest customer, could be delisted from the NASDAQ. They will trade on the pink sheets because they failed to file the appropriate SEC documentation, and their accounting firm, Ernst & Young, quit only a couple of days ago. That's not good. And the shares were up today. So I would not buy this dip. I went over this chart. I sold this too. God damn it. I got to work on my patience. I really do. I sold this. I called this breakout and I sold it. Really got to work on my patience. I did a big video on this too. This is a short. Scalp short. That's it. Is this optionable? Yep. Yes, sir, Bob. It is optionable. Maybe we'll throw out a call spread. Maybe we'll buy puts. I don't know. We're going to do something here. They didn't pay me enough. I want my money back. LABU, Biotechs, big move up this week. I was eyeballing. We'll go over Amgen later on when we do chart requests. AMGN, Bollinger Band squeeze on Amgen, and I really like it. LABU looking good here too. And of course, we need to go over SoundHound, and we'll talk about that in a moment. All right, so LABU looking awesome. This is a leveraged product. Higher lows on Stokes, higher lows on RSI, looking the bomb. Looks like it wants to go up. Look at the inverted head and shoulders setup. Left shoulder, head, right shoulder. Neckline right above. Good stuff here. What do we do on the daily time frame? Nice day. I think at any pullback here, it's time to buy. Staples. Avoid the staples. This is a risk-on market. discretionary names, a monster move. This chart here may be the discretionary ETF, but it's all Amazon and Tesla. Those are the two biggest weightings. So as goes Amazon in particular, Amazon makes up 20% of this ETF. Tesla makes up 12%. Fact check me on that. Tesla on the week. Wow, what a move here. Up 19.25% on the day. Up 2.9%. This has got more to go. Amazon on the week. Up 6.12% on the week. A monster. Big D energy here. But it's a short-term short. Scalp to the short side. I would not stay short very long. And by the way, while I'm thinking about this, I will be doing my Saturday scanning event using TrendSpider. I'll remind you later on. But if you're not part of our community, please sign up. It's free. I don't want any credit card yet. Once I figure out how to make it charge for it, I'm going to charge for it. So take advantage of my ignorance right now and sign up. Here is the link. Again, no credit card required. And if you do it now, there's a space in there for you to enter your symbols if you want me to go over symbols tonight. How much time do we have left? Not much. Emerging markets, nice move here. They broke down. I'm going to avoid them right now. Let's talk a little bit about energy. Weekly view. Looking good. Looking really, really good. Daily chart. We may need to fill this gap, but I think any pullback here, assuming that oil is moving up, which is up 4.13%. Wow, look at this reversal week. Look at this cluster. Wow. I think it's time to buy energy stocks. Bob, do you have a link to put it? Yeah, I just put it in there. It's in the stream, the chat. Yeah, I'll do it again. That's in there. Gasoline prices, they're up. So the problem is that this is inflationary. FLNG, we own this. It yields us over 12%. All right, let's talk a bit about gold. So gold paired some losses this week. I'm not a buyer of gold right now. I'm still bullish on it, but I think we're going to go into a bit of a correction here. Frankly, we're already in a correction. So I'm not a buyer. Yields are still too strong, and the dollar is still too strong. The dollar is still a question mark. I could buy gold with yields moving up higher. I can't buy it with the dollar going up higher. Gold mining stocks, weekly view. I sold half of our position up here. I can tell you exactly when I did it. Right here. October the 21st. Why? Because we were extended and the market was showing us signs of topping actions. The market sends us signals. And I mentioned the third standard deviation Bollinger Band a little while ago, and it matters. I watch it, and it's very extended. It was very extended. A lot of the froth has come off, but I think we're in correction mode right now, so I'm not ready to buy those shares back yet. I think we're good there. Let's go to some chart requests. We'll call it a night. That's not what I wanted. That's what I wanted. Okay, folks, we're going to be using TrendSpider. Link below. Get I think it's 65% off right now. Use the link below. Take advantage of it. Automated technical analysis, scanning, alerts, analyst ratings, options, unusual options activity. There's so much here. It's ridiculous. Seasonality. This is my favorite. Seasonality. All this is not just a charting software. It's a trading platform. And you can literally now connect a brokerage firm to this platform and trade off of it. Take advantage of it. I believe in it so much. I give it away free to our silver and gold level members too. The Contrarian Trader. Not ready yet? Fine. Link below. Get your 65% discount code and take advantage of their offer. And it helps me. It helps support the channel. All right, let's talk about requests. Tim, you're very welcome. Folks, we have about 24 people, and if I can ask you for 24 likes, that would be awesome. It really helps me out with the YouTube algo. And for those folks sitting there going, I don't want to join up. I don't want to join up. All right, here it is. It's a really nice forum. So take advantage of it. Invite your friends. Very professional, really nice people. And let's see what we need to go over here. There's not many. I'm going to refresh. That's probably the problem. There's no requests. That's a first. Okay. Looks like we're ending early today. I need to go over SoundHound anyway. Not a big deal. All right. So SoundHound, I did a video 3 weeks ago on SoundHound. I was bullish on it. Let's talk about the whys we were bullish on it. And I found this stock using TrendSpider's scanning software. And what I pointed to was a couple of things. One, a very, very tight Bollinger Band squeeze setting up. I scanned for this setup. The Bollinger Bands in red were trading inside the Keltner channels, and they began to break out. So a nice breakout here on not just a weekly time frame, but on a daily time frame. We were buying back in here. And nice move up higher. So very, very bullish on SoundHound. This was the hidden setup. A Bollinger Band squeeze on a weekly time frame and a Bollinger Band squeeze on a daily time frame. You guys may be saying, what is that all about? Well, what it is that normally the Bollinger Bands trade outside of the Keltner channels. And when you get the Bollinger Bands trading inside the Keltner channels, that means you have a lot of energy getting built up, a tug of war, if you will, between bulls and bears. And the energy is going to get unleashed. The question is, which direction? And we were confident that it was going to get released to the upside because we've been in such a long-term consolidation. So we were in a consolidation going into the year. We rallied, pulled back, new consolidation, higher lows. It makes sense. We're going to get higher highs. So we did that. Analytically, we, on a seasonality basis, I don't know how much data is here. Only 3 years you can't use. That's not enough data to use seasonality. Let's see what the insiders are doing. There's some selling going on here, but that goes back to August. Awarded to a lot of folks, but they didn't dump automatically. They're holding. Really? Here are the officers. They did some selling in September, but not a ton. So no bullish insider buying, but not a lot of selling. I don't really care what the analysts say. Let's see if there's any Any updates? Not recently. Back in September, the last was out of, I don't even know who D.A. Davidson is, with a buy. Webbush, I do know who that is. They came out with a buy. So their earnings, they come out the first week of December. And let's check on their revenue growth. Revenue growth had been grinding up higher, took a spill, has begun to grind up higher yet again. So bullish on SoundHound. We still have a position here. We'll add more on any pullback, any stair step lower, we'll add more. And that is it, folks. It is 7 o'clock. Yeah, no worries, Tim. All right, folks. Everybody have an awesome night, and I will talk to you tomorrow. Thanks for being here. Like, subscribe. You know the deal. And hey, Pete, welcome. And have a great